And it's important to pay attention to these meetings because the Federal Reserve, they play a major role when it comes to just monitoring interest rates, managing the money supply, and also regulating the financial markets. So like I was mentioning, they decided that they do want to keep rates currently where they're at right now, but they did signal that there's going to be 2 more interest rate hikes before the end of the year. What's going on, world? Thank you for watching another episode of Insightful Principles. In today's content, I want to talk about the Federal Reserve's rate decision of what they made today. They recently had their meeting, and this was kind of them just talking on where they expect what they're going to do with interest rates moving forward. And they had highlighted that they're actually going to pause interest rates currently at the moment. And I'm going to talk about all of that throughout this episode, as well as what their expectations are going to be moving forward within the future. And I am also going to highlight some of the themes that they talked about around just the labor market, as well as what's going on with inflation, and just kind of overall where the state of the economy is at right now. But if you all can please do me a huge favor, don't forget to like, share, and subscribe to the channel, and also on this video. Don't forget to hit that notification bell below so you can be notified every week when I drop content. So the Fed made a decision today that they're actually going to keep rates currently where they're at right now from 5 to 5.25%, and this is the federal funds rate. And for those of you that may be learning about the Federal Reserve and what these meetings are about for the first time, just wanted to provide a little background of what this committee exactly is and what they do. So the Federal Reserve, they are a central bank here in the U.S., and they are comprised of 12 member banks, and they typically have meetings 8 times throughout the year. And in 4 of those meetings, they actually detailed their economic projections. So that's what they had in today's meeting of June 14, 2023 of this recording. They actually outlined their economic projections with GDP, unemployment, inflation over the next 2 years and just long term. And it's important to pay attention to these meetings because the Federal Reserve, they play a major role when it comes to just monitoring interest rates, managing the money supply, and also regulating the financial markets. So like I was mentioning, they decided that they do want to keep rates currently where they're at right now, but they did signal that there's going to be 2 more interest rate hikes before the end of the year. And Jerome Powell, which is the chairman of the Federal Reserve, had highlighted that their terminal rate is going to be 5.6%. Now, when I say terminal rate, think of this as the ceiling. This is the cap rate. This is what their target is of what they don't want to go past. And they are expecting that terminal rate is going to be at 5.6%. And they did also highlight that as far as the median forecast of what they're going to be doing with the federal funds rate moving forward, they think by the end of 2024, they're going to be at 4.6%, and then they had stated that by the end of 2025 is going to be at 3.4%. We know that inflation, if you look at it year over year, for the most recent print that came out in May of 2023, it showed that prices rose 4% year over year, which was a slight decrease from 4.9% in April. Now, this is the lowest level of what we've seen in 2 years. And core inflation, which is an indicator that the Fed, they typically look at, they actually show that core inflation right now is at 5.3% year over year, and this excludes food and energy. And the previous month, it was at 5.5%. And Powell has stated in the meeting that the reason why they want to pause is because they want to assess the economic data, see how it filters into the economy, see what effects it's going to have in the banking sector, in the real estate sector, and just overall, how it's going to bring inflation down. They said that it's important for them to continue to keep their foot on the pedal, so to speak, and they want to make sure that they are restoring price stability, which means they want to be able to maintain the purchasing power for U.S. citizens. Now, I know another aspect of the meeting that really stood out to me is they really stated that they feel that core inflation is not going down as quickly as they would like. And he actually mentioned in the meeting, if you look over the last 6 months, it really shows that core inflation is not moving as quickly as they would like. It's much stickier. And even if you look here, you can already see, if you look since October, core inflation was at 6.3, and now we're in May of 2023, and we're only at about 5.3%. So you can see that it's been pretty much in a range. Even if you look since January, it hasn't been much movement. It's pretty much been staying where it's at, either 5.6 or 5.3%. So I think that that's another reason why they want to continue the aggressive take of having at least 2 more rate hikes and getting that terminal rate to 5.6%, is because they realize that core inflation, it doesn't move as volatile as the CPI, which is the Consumer Price Index, because CPI has food and energy included in it, which that tends to be more volatile with different price changes when it comes to inflation. But with core inflation, it's excluding those different areas. So it kind of gives you an idea of some of the longer term trends of where prices are going, and also where inflation can go within the future. Now, another important theme in the conversation was the labor market. The labor market currently right now, with the unemployment rate for May, was 3.7%. Now, this is at a historic low, and it is showing that there still are a lot of people in the labor market working right now. It is showing some resiliency. When you look at over the last year and a half, when we think about these interest rate hikes, we are still seeing that it is taking some time for them to want to get the unemployment rate at their targeted goal. And they actually had stated in their economic projections that they think that unemployment for the rest of the year could rise to 4.1%. And then also, more recently, we had the non-farm payrolls in the public and the private sector. That rose to 339,000. That was for May. And this really shows how many jobs are being created throughout the economy. So it shows that jobs are still being created, people are still working, and this was a lot better than the Dow's estimate of 190,000. So definitely showed that there was an increase with that. Now, one other thing that I like to pay attention to when it comes to the labor market is jobless claims. And this is the amount of claims of people applying for unemployment insurance due to recently losing their job. Now, for the ending week of June 3rd, jobless claims actually increased. It totaled 261,000, and this was an increase from 28,000 from the previous week. And it did state, according to CNBC, this is the highest since 2021. And a lot of the reaction after the meeting, as I was kind of looking to the different commentary, is that they feel that the Fed is looking at lagging indicators, whether it's inflation or unemployment, and they're not paying more attention to leading indicators that can give them more real-time data of what is happening in the economy right now at the moment. They think that the Fed should pause for much longer before they decide to raise rates. But we'll have to wait and see. I know July is the next Fed meeting. So we'll see at that time if they do decide to raise rates. But I think that some leading indicators that I'm paying attention to is the Purchasing Managers Index. Now, what this index details is it really shows if the economy is expanding or contracting. And if you look at the last 7 months of the PMI data, it has shown consecutively that the economy is contracting. It is showing that from a production standpoint, we are seeing a slowdown. And typically when the PMI is below 50, that's detailing that, okay, we're seeing some contraction here. And when it's above 50, it's showing that we're seeing, growth. We're seeing that manufacturing is expanding. And the PMI, it has a lot of great data inside of it that really shows new orders, it shows inventory, and just kind of shows overall where manufacturing from a supply chain standpoint, what's happening throughout the economy. So, I think along with this, looking at how the credit tightening cycle is going to impact the commercial real estate sector, how it's going to impact the banking sector. All of these different elements is what I'm going to be paying attention to from the results of this meeting. That I thought it was a very good Fed meeting today, and I think that they did make the right decision. And I think that when you think about what they've done up to this point and how the economy there hasn't been too much breakage in the economy. We haven't seen, other than the Signature Bank, the Silicon Valley Bank failures, we haven't seen too much. We still have seen that the stock market still has been going strong. We're seeing that the commodity market has still been doing well this year, and even when you look at the crypto market, it has been doing well this year also. So I do think that a lot of the tightening that they're doing, we still should see that. We should still have the expectation that rates will continue to increase, and that I take this meeting more as a hawkish pause. Meaning that even though rates are currently paused right now, it doesn't mean that in the next Fed meetings for the rest of the year, they don't continue to get back in the game and continue to keep increasing rates. Hopefully this was helpful for you all. As always, please continue to like, subscribe, and share. And don't forget to hit that notification bell below so you can be notified every week when I drop content. And I thank you all so much for watching, and have a blessed day.